Are you considering investing in Bitcoin to improve your finances? Think again. While Bitcoin may appear as a profitable option, it can potentially lead to financial ruin if you're not careful. This episode explains everything from the basics to the risks of investing in Bitcoin. Let's look at why Bitcoin investments could wreck your finances. But first, you need to understand what Bitcoin is all about. So let's find out. An anonymous group or individual invented Bitcoin in order to facilitate transactions without requiring the involvement of a dependable third party, like a financial institution or central bank. Timed to perfection, it emerged in the midst of a global financial crisis that rocked the confidence in governments and banks alike. Bitcoin gave users some degree of anonymity by enabling transactions using only digital identities. Because of this, Bitcoin has become the preferred medium of exchange for illegal activities, such as the most recent ransomware attacks. Much of PayPal's facilitation of payments contributed to eBay's rise. It drove the shadowy darknet of illicit online commerce. So, are you keeping up with the latest Bitcoin trends? Well, the most valuable cryptocurrency by market capitalization, Bitcoin, is in the news once more. Following steady increases during 2023, the leading cryptocurrency broke new ground in March of 2024, surpassing $70,000 for the first time. Despite this excitement, Warren Buffett, one of the most experienced voices in investment, has continuously stated that he has no interest in Bitcoin. However, determining whether Bitcoin belongs in your portfolio means going beyond the news of the day. Since Bitcoin can be very volatile and risky, you should only consider investing in it if you have high risk tolerance and are already financially secure and can afford to lose all or part of your money. Keeping a diversified portfolio with a variety of investments will help you lower your overall risk exposure if you decide to invest. Generally speaking, you should not allocate more than 10% of your portfolio to high-risk investments such as Bitcoin. If you feel ready, take notes on the topic to make the most progress. Have you considered investing in Bitcoin? Before you take the plunge, make sure you understand the potential consequences. So let's look into some of them. One is Bitcoin's price is volatile. Due to supply and demand, as well as investor reactions to news hype and regulatory actions, Bitcoin's price fluctuates much like those of other investments. The degree to which the price of Bitcoin fluctuates sets it apart from other investment prices though. The price ranges of most volatile stocks are measured in tens of dollars, and it's not unusual for Bitcoin to fluctuate between a high and low of $2,500 in a single day. Investors' fears of missing out on significant price movements account for the majority of Bitcoin's price volatility. Some claim that Bitcoin is not a trustworthy currency because it is too volatile. Occasionally, prices may move by double digits, but daily variations of 5% are typical. Its price dropped by almost 30% on May 19th of 2021. And from November 21st to May of 2022, it dropped by more than 60%. Bears contend it doesn't work because of large swings, despite the fact that it is usually recovered following these declines. Next is you have to secure your wallet. Your wallet needs to be safe, just like in real life. With Bitcoin, you can control your finances and transfer value easily and anywhere. There are serious security concerns associated with such wonderful features though. However, when utilized properly, Bitcoin can offer extremely high security levels. Never forget that you must safeguard your finances by implementing sensible practices. Another thing is that Bitcoin payments are irreversible. A Bitcoin transaction can only be refunded by the individual who received the money. It cannot be reversed. This means that whenever possible, you should deal with individuals and companies that you are familiar with, have faith in, or have a solid reputation. Businesses must monitor the payment requests they are showing to their clients on their end. It is best to have controls in place for extra safety and redundancy, even though Bitcoin can detect typos and typically won't allow you to send money to an invalid address by mistake. In the future, more services might be available to give consumers and businesses even more options and protection. Bitcoin is not truly anonymous. Using Bitcoin to protect your privacy requires work. Every Bitcoin transaction is permanently and publicly stored on the network, making it possible for anybody to view the balance and transactions of any Bitcoin address. However, until details are disclosed during a transaction, or in another scenario, the identity of the person behind an address is still unknown. For this reason, Bitcoin addresses ought to be used only once. Remind yourself constantly that you must follow appropriate procedures to safeguard your privacy. Next is that unconfirmed transactions aren't secure. There is no initial irreversibility to a transaction. Rather, they receive a confirmation score that represents the difficulty of reversing them. Every confirmation takes anywhere from a few seconds to 90 minutes on average. It can take a lot longer to receive the first confirmation if the transaction pays an excessively low fee or is otherwise unusual. Another thing is that Bitcoin is still experimental. Bitcoin is an experimental currency that is currently being developed. Every improvement increases the allure of Bitcoin while simultaneously posing new challenges as its usage grows. You can encounter increased expenses, delayed confirmations, or even more severe complications during these growing pains. Though no one can predict Bitcoin's future, be ready for issues and speak with a technical specialist before making any significant investments. Are you ready to master your money? Make sure to like this video and subscribe for weekly insights. Next, we're going to talk about the highs and lows of Bitcoin, understanding the risk. As previously mentioned, the price of Bitcoin may increase. It can also decrease significantly. It dropped from its peak by more than 75% in 2022. Cryptocurrency exchanges lack circuit breakers that stop trading automatically when prices drop too quickly, which is in contrast to conditional financial exchanges. Moreover, cryptocurrency markets are always in motion, and sharp declines can occur at any time. Exchanges cannot be undone. Millions of dollars worth of Bitcoin have been lost by people who misplaced or forgot their wallet credentials. Crypto exchanges are not covered by the Securities Investor Protection Corp's insurance, which is fundamental consumer protection, and Federal Deposit Insurance Corp is present in conventional financial goods. Since its launch in 2009, the original cryptocurrency Bitcoin has experienced an incredible journey. An 8-fold increase in just a year occurred when the price of a single Bitcoin soared to over $60,000. Then, in a matter of weeks, it dropped to half that amount. Given the volatility of Bitcoin, do you believe investing in it is a safe option for you personally? Because now we're going to talk about the risk to your finances. As Bitcoin gained attraction, using it became more difficult, costly, and time-consuming. Most Bitcoin transactions can be validated in around 10 minutes, and this year's median transaction fee has been around $20. Additionally, the volatility of Bitcoin's value has rendered it an unprofitable medium of exchange. It seems like you can get a beer with your $10 bill one day and then a bottle of fine wine the next. Furthermore, it is now evident that Bitcoin does not provide complete anonymity. The government's ability to track down and recover a portion of Bitcoin ransom paid to DarkSide, a hacker collective involved in the Colonial Pipeline ransomware attack, has raised concerns regarding the security and untraceability of Bitcoin transactions. Bitcoin has turned into a speculative investment, even though it hasn't achieved its stated goals. This is puzzling. It is not supported by anything and has no inherent worth. And as a result, a fixed cap of 21 million digital coins enforced by the Bitcoin computer algorithm, enthusiasts would tell you that, like gold, the value of Bitcoin comes from scarcity. However, scarcity alone is hardly a source of value. It appears that those who invest in Bitcoin adhere to the greater fool theory, which states that all it takes to make money on an investment is to find a buyer willing to pay even more for the asset. How do you think that this will affect the future of global payments and finance? Even though Bitcoin and other cryptocurrencies have high paper values, the financial system is unlikely to be shaken by their collapse. Banks have largely remained neutral. The most vulnerable investors are those who join the party late and are naive. This is true of any speculative bubble. Like in the GameStop story, retail investors should be advised by the government to act at their own risk. There isn't much more the government can or should do, but securities that allow speculation on Bitcoin's prices are already regulated. It is not safe to use Bitcoin. Using enormous amounts of processing power, miners process transactions in exchange for Bitcoin rewards. According to some estimates, the energy consumption of the Bitcoin network is equivalent to that of whole nations such as Argentina and Norway. Additionally, there are mountains of electronic waste from specialized machines used in these mining operations that quickly burn out. Regardless of what happens to Bitcoin in the end, its blockchain technology is incredibly innovative and clever. As demonstrated by Bitcoin, it is possible to conduct secure international and domestic payments without depending on predatory financial institutions that impose exorbitant fees by utilizing programs that operate on computer networks. In the case of migrant workers who are remitting money home, these fees can be quite demanding. Businesses and consumers would profit from technologies that make payments more affordable, quicker, and easier to track. These advancements would also facilitate both domestic and international trade. While Bitcoin's volatile prices attract attention, the revolution in money and finance that it has triggered will eventually influence all of us, for better or for worse. So the question is Bitcoin safe? The short answer is no. Bitcoin's volatility is higher than that of regular stocks, bonds, and funds, making it an extremely dangerous investment in addition to price. Other reasons why you might lose your Bitcoin include lost wallet access, exchange crashes, and fraud. When purchasing Bitcoin, it is wise to invest only money that you can afford to lose and to protect your asset with security measures. Always remember that your finances are important. Don't let the promise of easy money lead you to ruin. Stay informed and cautious, and make wise financial decisions for a secure future. Like and subscribe for more useful finance videos. But before you go, did you know that stock picking is a stupid idea? You can find out more if you click on this video right here.